Hello traders, hello everyone. Welcome to our new free Elliott wave session. We are streaming this on TradingView and also on YouTube and Twitch, I believe, as well. So let's wait a few more seconds and we will start this presentation. So it looks like everything works fine. Voice is okay, charts are okay. Perfect. Someone is saying good morning, hey currency trader. So if you have any questions, please let me know. I may also look at some of the markets that you are interested in, but I cannot promise that I will be able to cover everything, obviously, because I have some lists of the markets I want to go through here. Okay. So if you're not our subscriber here on YouTube, or if you're watching this on TradingView, please make sure to put your notification on to subscribe to our channels and make sure to support us in the future, okay, so that we will do more of those webinars in weeks to come. Okay, so firstly, I want to talk about the US dollar. As you know, the US dollar is coming to the upside. And the reason is obviously because of geopolitical tensions, and investors are looking for safety. We are also seeing at the same time, when the US dollar is trading higher, also metals and crude oil is higher as well. So stocks, on the other hand, could experience some weakness, but on the US stock market, we are seeing actually sideways price action. I mean, looking at maybe an European index like DAX, this one, in my opinion, is much more weaker. But even in the US, we have obviously small caps looking very weak. So I still think that when US dollar will finally hit potential resistance, stocks could move to the upside. But for now, there's still too much risk on the table. So that's why investors are trying to be on the safe spot and rather not risking too much, because as you know, stocks are considered as a risky asset. So investors, to be on the safe place, they want to be either in cash or something that holds value like gold. Okay, so looking here at dollar index, last time, if you recall, we said that this should be an important week for the US dollar. Either we are going to see a top, or maybe we are going to see more upside. And I said that this trend line is a very important one. Also, that was a March swing low that capped the downside here. So I think that for now, we still have to respect that the dollar is in uptrend. There is no reason to fight this unless the price action itself will confirm a reversal. And that would probably if we break 105.55. So that's still very important support level. And as long this one holds, I think that euro, pound, even commodity currencies like Aussie, despite higher gold and energies, could see more weakness. So watch out for the next few days for dollar to continue even higher. I'm looking for potential 108 area. And the reason why I think that we can see a bit more upside here is also because notice that this drop here, or even better, if we go to the smaller time frame here, notice that that's a free wave drop. Okay, and also we perfectly stop at the former wave 4, and this looks like an impulse. Now maybe just Monday price action, which typically can be a little bit slow. Also Mondays, I try to fade those moves on Tuesday or Wednesday. You probably know the phrase Tuesday reversals. So I think that if we see a little bit of more weakness today on dollar, then maybe tomorrow we could jump higher and potentially even see further gains here close to these highs within the higher degree fifth wave. Okay, so as long as this level holds, I mean, if you're looking for some kind of intraday setups, that's definitely the risk that you should consider. Below 105.50, I think that things could become a little bit more complicated or even bearish for the US dollar. But of course, because as you know, what is happening between Israel and Hamas, there is definitely a lot of risk on the table, and this could, at least for now, still drive the US dollar higher. We also have, as I said earlier, we have crude oil coming to the upside. It's almost up, 10% from, what was that, October or September low? From October lows, okay? A lot of analysts are calling crude oil for a break above 100 if these tensions will escalate. Of course, that's definitely possible and valid, but what I have noticed over the last few years, that always when there was some conflicts like this, of course, crude oil on the first news, when the news came out, crude oil jumped extremely sharply to the upside. But then when this will keep going on, these tensions and geopolitical risks, somehow investors will try to respect what the market is doing, and then they will actually not be focusing so much attention to this news, and that's when actually crude oil could slow down, because this news has already caused movement on the crude oil. So I still think that at some point crude will try to stabilize. We have even saying Russia and Venezuela that they agreed to increase their crude oil outputs to stabilize the energy market. So we'll see how this will unfold. But as I will show you a little bit later, crude oil, in my opinion, is a very nice technical resistance. Also from a sentiment perspective, a lot of traders, investors, because they are just extremely bullish on crude oil, I just think that we have to be aware that maybe there will be the opposite, because as you know, market usually does the opposite of the expectations of the crowd. Okay, so that's for the dollar. And now, since we mentioned crude oil, let's take a look on crude oil here. So I still think the crude oil is in a recovery mode. Obviously, I will be looking for more upside as well, but just let's say for the next 2 weeks, 3 weeks, I still think that there is a chance that crude oil will firstly test the lower support levels. So if we firstly revisit this structure here, you can see that we might complete this wave A of a higher degree drop, and you are now in a wave B correction. So corrections should be made by 3 waves. And since this was a very strong rise here out of this downward channel, I just think that there is actually room for more upside after this pullback. So corrections are made by 3 waves, and this was the first leg, wave A. You will see wave B pullback and more upside for a wave C. And if we focus now on the substructures for wave B, well, that's where I become a little bit more careful regarding the bullish calls, because notice that this was an extremely very sharp reversals. By the way, we were tracking this bullish trend for a while here over the last few weeks, and then spotted this reversal. It's a very strong breakdown, and that's the lag that, in my opinion, is impulsive. It's a very fast and clearly very sharp and extended lag. Okay, so normally that's the personality of an impulse. So I think that's the first leg of this 3-wave deeper correction for a wave B, and the ideal support goes back to $77 here for a former wave 4. So I still think that there is a very strong potential resistance around 86 up to 88. There is also the 61.8%. There we have these former swing lows. But again, I know what's going on in the world. Obviously, the war will try to bring crude oil even higher. But from an Elliott wave perspective, I just do not want to fight this current structure, because it definitely suggests the opposite. I have to respect what the Elliott wave structures for me are telling us, because that's how I look at the markets. And we know that Elliott waves try to follow the sentiment. Okay, so if I trusted Elliott waves here when we were tracking all this uptrend, then definitely I should not ignore the wave structure here. Okay, but obviously I can be wrong, but for now that's what I'm seeing. I'm just aware of potential new movement or new reversal to the downside. Okay, now let's take a look also on maybe on the 10-year US notes. Okay, now, or maybe even better, US yields. Now we are still trading here above 4.3%. Okay, so there's definitely still an uptrend, and would be too soon to say that we are topping out. I'm not really sure if wave 5 has finished here, or maybe there's another push to the upside coming. Looking at the 10-year US notes, there's definitely a chance that you count this rally from the lows in 3 waves. Okay, and that's still an ongoing downtrend. Even some gap occurred here last Sunday. Okay, when this war between Israel and Hamas started. So actually, maybe this gap will still be filled, and this could mean that higher US yields could potentially again make the US dollar a bit stronger here. Okay. Now, let me take a look on the euro. So, euro, pound, these currencies are still in downtrend. Looking here, okay. So, looking here at the 4-hour time frame, notice that market failed actually at this upper trend line of this downward channel. So clearly, that's still a downtrend. And by the way, we have seen a reversal down from the former wave 4. It's a pretty strong decline here. And also on a smaller time frame, if you will check, you will see that this was some kind of an overlapping recovery. So I think this can be a correction, and now downtrend continuation. So as long as we are trading here below 106.40, and definitely as long as we are holding prices below this upper channel resistance line, I think that there is a chance that we will see a retest of the lows. But what I like so far about the potential bottom, let's say after that new low, because I am waiting on a fifth wave, by the way, I really like that we are so far that we are already seeing first signs of divergence here. So of course it depends how fifth wave can be strong here to the downside, but these kind of divergences obviously can occur in late stages of current trend. So I'm waiting to see another low here, and then if we have a divergence, I would be even more confident that we are really trying to put the lows in for a fifth wave. If suddenly, let's say, the prices will reverse and break above 106.40, as I said, then maybe bottom is already forming. Okay, but on a big picture, still we can be trying to complete this wave C of a flat correction, or maybe even another interpretation which is very valid is that this very strong drop is just a sharp wave 2. I do not really like this wave count that much, because if that's correction, then even with some different labeling could be at some point labeled even as an impulse, and it means that wave 2 could potentially be even more complex and deeper. Okay, so I think that no matter how I look at it, at least in the short term, after that final push to the downside, I think that there can be some rally coming for the euro. Now let's take a look also on cable. Now we have, I think that UK CPI data will be released on Thursday, Friday. So this could potentially cause some volatile moves here on pound, but for now they're still looking, everyone is looking, as you know, for inflation to come back to 2%. So it really depends what will be the data. If the data would be again inflation, let's say, that would be much higher, then this means that Bank of England should do a lot more, and obviously this could support the pound. But if inflation would come to the downside, then I think that cable will easily revisit the lows. Maybe this will happen already before the release. I mean, because notice that last week, if you recall, we were looking for this very nice correction here, okay, that stopped at the previous channel resistance lines. It was the base channel, and as I said last time, normally that's the perfect area whenever you're tracking the wave 4 rally. Okay, against the previous very strong drop, which by the way was even extended here, accelerated here in the middle of this decline. And also we stopped at the 38.2%. So for now it looks like that pound still has room for more weakness here to make this fifth wave, maybe even 1.2 level. That's the support. But on a daily chart, the one level that I would observe as a potential very big support going into the end of the year is definitely 1.18. Okay, it was also the swing low here going back to 2022 July, even here in January of this year and March. So clearly that's a very important level here if we are going to see a retest. So euro sales looks good. Yeah, I mean, for me, euro dollar is still in a bearish trend, and as I said, as long as we are trading below 106.40, I think that selling rallies at this time still makes sense. Obviously, at least this is how I see it. I'm also short pound, by the way, so the correlation should stay there. Because in general, I am long dollar. Okay, so. What about pound yen buys? Well, I will try to look at the pound yen a little bit later. Okay, now let's take a look on Aussie. So Aussie, if there will be any kind of a lag here on YouTube, please let me know so that I will try to switch my charts here a little bit slower, and that I will wait a bit more time before start talking about it. Okay, so Aussie, still a very deep correction. We even are trading now below the 78.6%. Okay, but still looking at maybe 4-hour time frame, this one it's a bit more important to me, at least at this stage. Why? Because notice that after this very sharp and strong decline, the price, despite new lows, is now try to acting a little bit strange, right? And normally this kind of overlaps here suggest that bears, which by the way are still in progress, are losing strength. Okay, and market is losing momentum here, but volume could again start to pick up. But normally this happens to the opposite side, which is not really expected, right, from the crowd, because everyone is seeing this as a bearish trend. But whenever you have this kind of wedge formation, by the way, that's an ending diagonal, I think that it's worth to consider the potential bullish reversal. Okay, so be prepared if maybe the price will stabilize here at a new low at 62.50 maybe. Okay, that's, or 6200, that's the potential support. And then afterwards, if you see this trend line broken, then I think this could really be start of a very strong move to the upside. And normally when you have this kind of a pattern, price will try to retrace at least to the starting point of the pattern, which is here at the former wave 4. Okay, but if we really break this level, then I think much more upside will be seen. So the same thing as with the US dollar, actually, I said earlier, there can be a final push to the upside towards 108. So maybe this will be also the same time the final push to the downside here for a wave 5 on Aussie. The one thing that concerns me about the Aussie is still dollar Chinese yuan. It's really not moving much. China is trying to do everything, that they even are, what they read earlier, that they are trying to limit potential shorts on stocks. Okay, just because they are looking everything to support the stock market. So but looking at the dollar Chinese yuan here, it's still consolidating, could even see a push to the upside. But I think if, let's say, dollar Chinese yuan really breaks higher here out of this triangle in a wave 4, this could cause obviously more weakness on the Aussie. But then I think that this break above 2022 highs could be the final push within this recovery. So I would be expecting a major reversal here going into the end of the year. So maybe we are still missing this final piece of the puzzle on this dollar Chinese yuan uptrend to finally end the weakness on Aussie. And even if we look at Kiwi, YouTube is fine, no lag. Okay, thanks, Jukes. Okay, so looking at Kiwi, as I said, commodity currencies are still weak. Even this one suggests more downside. I mean, as you know, in Elliott wave terms, okay, if you see very nice directional movement, which clearly has been the case here since summer highs on Kiwi, and then rallies are only in three waves, then you just have to respect this and be aware of more weakness here. Okay, so I think that Kiwi could retest the lows, but then ideally will make final wave 5 of a higher degree complex correction. And that's the higher degree complex correction. Notice that that was a very nice run here up from 2022 lows, okay, to this 2023 February highs, and now we are turning to the downside. So market is definitely coming to very nice interesting support, but as I said, final fifth wave is maybe still missing here for another final leg and then final low, and then I would be expecting a reversal. And also keep in mind that always when there are geopolitical tensions like this one, and market is maybe sometimes moving sharply to the downside, then market is waiting on any kind of a positive news, and then the reaction because of this any kind of a positive news could be a very strong one. Okay, so if conditions would improve between with Israel, then I think if maybe they will stop firing, then maybe who knows, stock market could bounce very very sharply, while on the opposite side of that, obviously US dollar could come then back to the downside. uh, Now, let's take a look what we have here. Dollar yen. Now, unfortunately, we still don't have any kind of a top formation for dollar yen. We had some speculations going on. I mean, not really sure if that was confirmed for speculation not speculation, but intervention here back at the start of October. But now, because this was only temporary reaction to the downside, I just think that there is a chance for another push to the highs. There would probably be a lot of traders on the wrong side, because I'm sure that plenty of traders jumped on the short side after this very nice spike towards 147 or so. So we are looking for another push to the upside and then a reversal. I even have another wave count here, which shows potential ending diagonal. I really like this one. And again, it suggests that we could see a move to the upside, but then the final fifth wave should be obviously much shorter compared to the wave 3. So 151 is maybe then the potential resistance. But again, from a trading perspective, you clearly want to see firstly that market makes a reversal from your potential resistance. Okay, so I still think that it's worth to wait on a 5-wave drop before you may look and pull the trigger. Okay, so I will wait any kind of this 5 waves drop. I think that this could later on be a very interesting potential short setups for dollar yen. But for now, obviously Bank of Japan is not doing anything yet, but Japan's top currency diplomat said that they are in close contact with the US on the FX moves, and obviously will take appropriate actions when needed. Okay, and even a rate hike is one option, but for now they are not commenting if this is the if these are the levels where they should act. Okay. Okay. Okay, so we covered crude. Okay, now let's take a look on maybe in dollar Mexican peso first. Okay, so dollar. Not sure why is this. Okay, let me just. Okay, so dollar Mexican peso here, as you know, still stopped at the 38.2%. We have seen some very nice reversal, and what I like about dollar Mexican peso is that this one could still continue much lower, because we can see some resistance, some sellers showing up despite the dollar being an uptrend, despite these geopolitical risks. So if conditions will improve, I think that Mexican peso could rise still significantly. Keep in mind that this one was a very good carry trade here over the last, on the short side here, over the last few, 2 years, if not more. So I think that this downtrend at some point will resume. Now, looking at the 4-hour time frame, we are not breaking this trend line, but if we can see a daily close here below 1770, then I think that much more weakness here could be in the cards, and potentially we are then completing this recovery. Also, notice that there is no way I could count this from the lows as an impulse. Okay, so if I cannot count this as an impulse or motive wave structure, like a maybe leading diagonal, then it means that it's most likely a correction, because we have overlaps. Okay, so this kind of overlaps confirms the fact that market is not directional. Okay, so in my opinion, it's worth to look at a little bit back here and check where the directional moves was. And clearly here was to the downside. So I think that more weakness here could occur. But of course, I want to see maybe this 1770 broken. It was a very nice, strong resistance here. We broke higher. So now, who knows, maybe it will act as a support. That's why I want to see daily close below that level. And then to make sure that wave 4 maybe has ended. Because obviously crude oil stocks will try to impact this currency pair as well. That's why I'm saying that it's very, very important maybe to wait on some supports to be broken, especially when you have dollar acting as a safe haven when looking at or compare it to other sets. Okay. Now, also, let's take a look on pound Aussie. I'm not sure if everything is, just a second. Okay. Okay, now let's take a look. Someone asked for pound yen, I think. So let me check what we have here. Yeah, I mean, pound yen is clearly looking bullish here. I mean, it's still an uptrend. I think that this recent drop could be a wave 4. So yes, technically, and from an Elliott wave perspective, I think that there can be more upside. We are trying to break out of this bull flag. But keep in mind that if dollar yen will be moving to the upside, okay, and if Bank of Japan will come out with any kind of intervention, then even these crosses will be impacted. So at this level, somehow I try to avoid the risk on these pairs. Okay, technically, yes, there can be a much more upside, but as you know, if there will intervene, then moves can be huge and volatile, and even stops cannot be triggered and executed at your price. So I think it's a very risky, and that you have to observe maybe what is happening with the dollar yen. Don't just blindly track these yen crosses. I think the dollar yen is much more important here. So if dollar yen maybe moves towards 155, 51, of course there's still room for more upside on these yen crosses. But whenever we print new highs here for October on dollar yen, I think that that's where you should become very, very careful and nimble here. Okay, because if dollar yen is about to top out later on, even those pairs will be impacted. Now, let's take a look on gold and silver. Now, these were very strong movers, and if you were with us in our past webinars, then you know that we have been watching, observing metals very closely. Specifically, we focus on gold. So if you recall here, we were looking for very nice, beautiful, and we still are, by the way, beautiful Elliott wave pattern. Okay, it's an 8-wave cycle. So you have the 5-wave movement here to the upside, and then the 3 counter-trend movement. That's the perfect 8-wave cycle, which normally, if you read about the Elliott waves, it represents the perfect reversal pattern. Okay, so it suggests that market could be bottoming here, and we are headed much higher. So I think that this recent bounce that occurred away from this former wave 4 suggests that we completed this correction. We are now at the upper trend line. So it was a pretty volatile move here. Nothing moves in a straight line. So maybe now it's time for a new breather this week. So for any kind of a correction here, I think that then watch out for the supports around 1886. Okay. If we break here above 1951, then the support could be this broken trend line, obviously. But looking here at the, maybe even, let's take a look on the hourly chart. Okay, maybe we see another push to the upside here. If that's wave 4, then this will be the final push of this first impulse. So if you're looking to ride these metals, you definitely want to wait on maybe on a higher degree correction. Okay, just chasing it here, okay, still could work out, but keep in mind that maybe risk reward is not the best here at this stage, because I think that sooner or later there will be higher degree pullback. But again, from a higher standpoint here on a higher degree time frame chart, I still think that gold should resume higher and at some point even retest these highs from this year. Okay. Also looking at silver, maybe silver is even better. I think that silver lagged a bit when these geopolitical tensions between escalated back a week back. Actually, gold was doing much better than silver, but what we have seen on Friday is that even silver is now trying to join this recovery. So I think that maybe silver could be even better, because when metals are in uptrend, you will typically see that gold silver ratio, okay, will move to the downside. So watch out gold silver ratio. It could really help you to identify which is the better choice. Okay, is this gold or maybe silver? But obviously, if metals are in uptrend, both should move to the upside. But looking here at silver, maybe let's take a look on a weekly chart here. I think people have to realize that we are still in no man's land. Okay, but because I'm looking at the markets from an Elliott wave perspective, and I know that this is just a lot of noise, I try to maybe scale out a little bit and just realize that this was the very strong move. The first part of this recovery that could still continue at some point has actually started back in 2020. So I will be looking for more upside on silver, but I still realize that we maybe will have to wait, who knows, till 2024 before the market will break higher, because you are in the ABCDE triangle. And recently we completed wave C. So in the short term, there can be some potential opportunities on the long side, but maybe only toward the upper side of the range. Keep in mind that whenever you are in the range, there can be opportunities between these ranges. So if we're now stopped at the lower side of the range, there can be opportunity to trade towards the upper side of the range. And why I think that we could be bottoming here is because looking at the 4-hour time frame, notice that this looks like an impulse. Okay, firstly, I thought that this is corrective wave 4 and that we will see another low, but since we broke here above the previous swing supports, notice that these were 3 points that represents very strong resistance here around 22.30, but notice that we closed on a weekly and daily basis here, obviously on a weekly and on a daily as well, here above this level. Okay, so because I can even consider this to be a 5-wave movement, I think that more upside here can be in the cards. So if you're looking maybe for metals, I think that at least for me, silver could be a little bit more attractive and interesting. I would be watching for a pullback. So if we see 21.70 or $22, that could be quite attractive support zone for a new bounce to the upside. Invalidation level, obviously, and looking at this short term, is at 22.70. So as long as we are above that level, I think that there is a chance that market will continue higher towards the upper side of the range for wave D. And as long as there will be any kind of a risk on the table, okay, geopolitical tensions, metals can stay in uptrend. Of course, as I said, they will not move in a straight line, probably not. You will see maybe some kind of a pullback. And whenever we see this pullback, I would also compare it maybe to this wave eland. So something similar I would love to see here in price and time. I would love to see here in this wave B. Okay. Now let's take a look what I have here. The S&P 500. Okay, so the S&P 500, as I said earlier, despite this geopolitical risk, I mean, I'm surprised that stocks are still doing well. So if this will not escalate to something bigger here, then maybe stocks really bottomed. And I think that if the S&P 500 breaks this 4430, I think that more upside will be in the cards. Okay, so watch out for potential resumption higher. I still think that we stopped at very beautiful levels here. Even fill the gap. Let me bring this chart on. So as we already said last time, this trend line support has seen some break to the downside, but it was a failure one. So I think that that's still a very good uptrend. We had down here when the price was testing and even slightly breaking this trend line, we had puts moving into the extreme. So again, sentiment is driving things a little bit different than crowd expected. So I think that there can be much more upside here on the S&P 500. But maybe it's not the same thing for DAX. I'm thinking that European indexes are in a different position there. We have economical conditions are definitely much worse than on in the US. So I would, if you're looking for risk on, maybe keep an eye on the S&P 500. I think it looks much better. Also, as we discussed already a few times, seasonality chart shows the bullish picture for October. Okay, so I think that this one is still very valid and could be even underway. Okay, so if you're looking for any kind of longs, keep in mind that 4430 could really cause much more upside here. Invalidation level is at this lows, because if this low is broken, then things will become much more complicated. I will definitely have to adjust the wave count here, but let's go step by step. Okay, now also DAX, as I said, notice where the DAX currently is trading. Okay, it's also even breaking this upward channel, and even this rise here contains 3 waves, not 5 waves. So I'm afraid that maybe there is another leg to the downside coming, and then we see a reversal. So we have to be a little bit patient here, but still there is a very nice strong support when you look at those swings here. Okay, even here it all started already back in October of 2021, so 2 years back. Okay, so these levels were very important. Maybe market wants to test this before it can turn to the upside. Now let's take a look also on Bitcoin. I'm just seeing that Security Exchange Commission approves iShares Bitcoin spot ETFs. Okay, so that's definitely the reason why currently we are seeing Bitcoin moving to the upside. In fact, we updated to our members earlier today that this was only a 3 waves drop and that market should stay bullish. So now we are seeing some very interesting strong move to the upside. I'm wondering how the market will close today. Just don't jump blindly into this kind of moves, because you know that this can be a temporary. So it's very important whenever you're trading or tracking cryptos, okay, that you're much more patient compared to maybe to the FX, because this market is much more sensitive, much more volatile. So for me, it's important to see, maybe, let's say, if I want to see on the FX daily close out of the range to confirm that the range is broken, well, on the cryptocurrencies, I want to see maybe 2-3 daily closes out of that range. So just be aware that market will always try to confuse the traders and investors by by failure removed. So I'm just wondering what will happen here. We are at the 61.8% resistance. Maybe that was a completed flat correction, or maybe you are still trapped in a higher degree triangle, which is also very probable, because this first leg here from that low can be even counted as three waves as part of the 7 swing correction. Okay, so just be careful here with cryptocurrencies. But still, major supports obviously have been retested. You can see clearly here that that's as some kind of a bull bear line. As long as we are above that, I think that Bitcoin has a chance to break at some point this 32,000. Okay. Also, if we take a look at the Ethereum. Okay, so if you just joined, please make sure to subscribe to our channel, to press a like, to leave us some kind of a commentary so that we will be more visible, please. Okay. Okay, so on the Ethereum, still looking at this drop from April 16, it's a free wave movement in my opinion. Okay, or can be even labeled a little bit different as a 7 swing correction, but important is that I'm looking this to be a correction. Now in corrections, the price will try to bottom or complete this control trend movement at the lower side of this channel. So we came pretty close here. We even retested the lows as expected, because last time when we were discussing on webinar, we are trying to stabilize. I'm not really sure if that's already it for the fifth wave, or are we going to see another retest here, lower levels. But definitely, if I would have to say where the price will be in 1 month from now, I think that it will be higher. Okay, but I'm just waiting on this intraday price action to confirm that the low is in or no. For now, it's because if we have a volatile session, obviously it's a bit too soon. Also, let me take a look now on some of the single stocks for the end of the webinar. Okay, so let me check what I have on my list here. So firstly, obviously, we want to look at Apple. So looking at Apple here, we had a very nice free wave drop, okay, from the highs, and looks like that we are now trying to stabilize here at 170. So as long as we are above that level, above the recent swing low, I think that there is a chance that Apple will be trading much higher. Even if you look here closely on a smaller time frame, okay, I think that there can be then could be much more upside. Looks like that this could be an impulsive bullish turn, so watch out for potential break out of this downward channel. Then I think that would really see more gains here. So as long as we are trading here above this level, and if at the same time, as I said, stocks would maybe with the S&P 500 breaking above last week highs, I think that at the same time, if we see Apple also trading higher, obviously I would be looking for maybe even for a resumption back to these previous highs. Looking at also at Meta. Okay, so this one is a bit different, but I still think it's a very nice uptrend. Clearly, I mean, we had a very sharp moves to the upside, but looking here at this current price action, looks like that because of this very extended move, which by the way was in play for what, since November of 2022, so almost for a year, I think it's healthy for market to make a pullback. So if I have to identify potential supports for the pullback, then that's definitely for wave C here around 2070. Okay, why? Because notice that the move to a new high was only temporary here and clearly has been made by 3 waves. So maybe that was uh, 3-wave movement for a wave B that belongs to this irregular formation here for a wave B, maybe even a flat. So this, if we come back towards 270, 280, I think that would be the perfect support here for this market to resume higher. Also, let's take a look on Amazon. Okay, so Amazon here, in my opinion, is also in uptrend. We have even seen extended lag here, much more extended and longer compared to the first leg. So normally that represents wave 3 as part of an impulsive recovery. Okay, because in impulsive structure, the wave in the middle, wave 3, will tend to be the longest. Okay, so I'm looking for more upside here on Amazon. But notice that what recently happened is that market filled this gap here. Okay, so that's very important. Normally, if the prices, okay, will gap to the downside, what will tend to happen is that this gap will be filled, and whenever this happens, well, then market can resume back to the downside. So I'm afraid that maybe wave 4 could be a little bit more complex, but would be different story if at some point we can see a weekly close price above that gap. So if we see, let's say, close around 140, then I would say that this gap did not cause a new sell-off and rather just filled and now ready to resume higher. So I think that Amazon, yes, could continue higher, but just be aware that maybe this wave 4 could be much more complex. Okay, traders, I hope that you enjoyed our presentations, and that make sure that you press the like, subscribe to our channel, and next time if you have any kind of questions, let me know. You can also contact me on Twitter as well, and I will prepare my charts there before going into the webinar. Okay, so again, I wish you good luck this week. Be careful, markets can be very volatile because we know what's going on, and unfortunately this kind of a volatile moves obviously